For our first episode of 2025, we are going to be making market predictions. What is going to happen in the Brisbane property market throughout 2025? We're going to share our views, but also the views of other professionals in the industry. We hope you enjoy this episode.
Welcome to the Brisbane Property Podcast with your hosts, Melinda and Scott Jennison.
Hi, everyone, and welcome to 2025 and to the Brisbane Property Podcast.
Welcome back, everybody. We hope you have had an incredible Christmas and we wish you a very happy new year. And what better way to start 2025 than by helping you understand what are our predictions for the Brisbane property market for the next 12 months. And in fact, I'm not just going to share our predictions. We're going to also share the predictions from other people in the industry, other groups, other banks, so that we can see who might be accurate when we go back at the end of the year and reflect on what those predictions might have been.
I think off the back of last year, jumping straight into 2025, Brisbane, Perth and Adelaide are expected to lead the way. I think they'll lead the nation, a strong demand side of things. And I think more affordability. I think they're the big areas that will lead the way.
And, you know, it's funny that you say that, Scott, because I have an opinion about this. I feel that Adelaide may start to slow down sooner than Brisbane and Perth. I think that Brisbane's got the best legs, if you like, for long-term performance, given the huge amount of infrastructure development that is being fast-tracked in the southeast corner in preparation for the 2032 Olympic Games. And of course, this is driving the local economy. But when we're looking at the next 12 months, I absolutely agree. We're going to see mixed performance across capital city markets throughout Australia. But the big things that are benefiting the likes of Adelaide, Perth and Brisbane that have been an ongoing issue throughout a lot of 2024 is the supply shortage. We've still experienced much lower listing volumes across these three capital city markets compared to listing volumes in the likes of Sydney and Melbourne, which are now above their long-term average. Across Adelaide, Brisbane and Perth, listing volumes are still well below that long-term average. And in a market of tight supply or fewer properties available for sale at a time where demand is strong, that's what puts that pressure on prices. So my view is that Brisbane and Perth will be the top two capital city markets in terms of growth performance. Adelaide will come in within the top three, but perhaps slip down into third place.
I think, look, people will probably say you're biased because you live in Brisbane, you buy in Brisbane, and we always say we love Brisbane up here. But if you look at Brisbane, if you look at the property market as a race, and I know it's not a short race, but it's a marathon.
Yeah.
I have to agree that I think Perth will start to tire in the back end of the marathon, and I think Brisbane will continue to actually grow because of the Olympic Games and the infrastructure around that. I think long-term wise, when you look at property, not just the houses and the units and those sort of things, but the infrastructure, the growth that's going to happen, the population growth, Brisbane going onto the world stage as well in the future. I think that long-term play for property, I totally agree. And I think at the end of the marathon, Brisbane will probably finish on the podium.
And some reports that we actually discussed in our November monthly update on the Brisbane Property Podcast, we highlighted affordability for metropolitan areas in terms of rental affordability. And at that time, we mentioned that there were two capital city markets which were considered unaffordable for tenants in those locations, and they were Greater Sydney and Greater Perth. And this is one of the reasons why I feel Perth will come off its run of really strong growth. A lot of the Perth boom has been driven by investors moving into the Perth market. Now, if investors are no longer going to see strong returns through rental price growth, and if we see affordability caps start to come into play for tenants on a rental perspective, that may have a run-on effect in actually investors considering other markets. Now, it's certainly an indicator that I'd be looking at if I was a property investor. Now, no markets are considered great from an affordability perspective for tenants except for ACT, where rents are considered acceptable. However, other capital city markets such as Greater Brisbane, Greater Melbourne, Greater Adelaide, and Greater Hobart, it's considered moderately unaffordable rents. And again, this is where getting an understanding of areas within greater regions is going to be important for investors moving forward. If you are buying into an area that is unaffordable for the locals who live there, then that could present as a risk to you long term, especially if you are a property investor. So again, not all of Greater Brisbane is one property market. And when we look at Greater Brisbane, we can see precincts or areas, even suburbs, where affordability is still completely acceptable, and other areas where it's completely unaffordable, not only for tenants who are renting in those locations, but also for the local owner occupiers who potentially become buyers in those locations. And this is why it's absolutely critical to get a broader understanding of what's happening in local markets within a capital city market to understand which areas are low risk and which are high risk. And obviously that's the benefit of partnering with a qualified property investment advisor, because they're going to give you those local insights to help you understand which suburbs are lower risk than others. I'm also going to overlay that, and sorry, I know you were about to talk, Scott, with it's not just buying into a suburb, it's buying into a pocket within a suburb, because not all parts of a suburb are created equal. And I feel as we move forward in 2025, we will see more and more of this local divergence in terms of performance. We do already see in Brisbane, some parts of suburbs are just not the desirable pockets, and they don't grow in value as much as pockets that are highly desirable or have some scarcity factor. In the last couple of years, we've seen this unfold in some of even the blue chip locations. If you're in a low-lying area that's exposed to flood, these homes sit much longer on the market. We don't see that demand in that segment of the market. Whereas if you're in an elevated position, potentially even with city views, very high demand and very desirable locations. So just a word of caution. Just because you're buying into a suburb does not guarantee performance. It's also the pocket within the suburb, and that is where local knowledge is going to set you well and truly ahead of relying on data alone.
When we look at predictions and looking at the market, obviously there's some things that influence the market.
Yep.
Now, when we talk about obviously long-term play, when I talked about Brisbane with the Olympics and things like that, there's a few key drivers that we have to watch for when we're looking at predictions and how we think the market's going to perform. Interest rates, I think that's a massive, that'll be a huge pivotal thing, what's going to happen. Inflation easing, slowing, somewhat sort of sticky area, but you know, we've got a federal election, which will probably happen partway through the year. I don't think, and I said this on a podcast last year, that I don't think that will change until after the election. I think they'll sort of sit tight on that.
The interest rates.
The interest rates. So I think that will probably stay. Might do a rate cut. You never know. Supply, obviously, very, very constrained on that side of things, the supply side of it, and listing numbers as well.
Yeah, look, I do think that, if we see an interest rate cut, whether that's earlier in 2025 or whether that's pushed out to beyond the federal election, which is probably the more likely scenario, it could reinvigorate buyer demand across many markets. What an interest rate cut will do is it will actually improve borrowing capacity for people, and it will also boost sentiment. I recall at the beginning of the interest rate hiking cycle, the very first interest rate increase that we had, the sentiment just went from positive to negative overnight. The media got hold of it. You may recall yourself, it felt like Armageddon. It felt like everything was going to collapse because interest rates had increased for the first time in a very, very long time. Now, the way the market responds to that, especially through media messaging, can really impact that sentiment in a market as well. The opposite is generally true when we see interest rates come off or get cut, in that it actually boosts that sentiment. And this is what we expect is likely to happen, and that will reinvigorate that buyer demand. Now, obviously, there's a lot of affordability challenges, and I don't think that we can discuss what's likely to happen in a market without addressing the affordability challenges that have persisted throughout 2024 and will continue to exist throughout 2025. We know and understand that debt servicing ratios are reaching record highs for many individuals who are purchasing. However, despite this fact, what Australia has, which is very unique to Australia and quite different to many other parts of the country, we have a diverse nation of land. However, the demographic urbanisation is restricted to very, very small centres where we've got a concentrated population cohort. And because of this, not all land is created equal in terms of the demand for that land. People find and will pay for scarce land in areas that are accessible to the locations where they work, the locations where their lifestyle drivers are very close by. And because of this, that will continue to put pressure or demand into certain geographical spots. And this is what actually alters the demand for some properties over others. It's all about the scarcity of the location, and that can obviously have an impact on driving its value. So we do expect that the continued population growth will have an impact on putting upward pressure on prices, especially here in Southeast Queensland. But because of constrained new supply of housing, and because of low listing volumes, we expect that the growth month on month will continue to be positive.
Construction costs. I actually had someone call me the other day. I spoke to me the other day and asked the question, can I see construction costs coming down? And I said, no, I actually can't. I think material wise, we've probably stabilized a little bit. That won't drop, I don't think. Labour wise, look, we've got a shortage of labour, especially in Southeast Queensland. We have a lot of infrastructure happening. We don't have enough tradies. So I can't see the labour side of things of construction coming down. And again, that will limit the supply of new developments. So there'll be pressure on that segment of the market will have a lot of pressure on it because there's not enough new supply coming through.
Let's unpack this, because you mentioned we've got this strong infrastructure development pipeline. All of this infrastructure that is being built in Southeast Queensland in the lead up to the Olympic Games requires labour. It requires construction labour. We already have a shortage, but what's happening, which is specific to Southeast Queensland, is that construction labour is being taken into the government projects, the big infrastructure projects, and therefore it's being removed from smaller residential projects. And so we have seen in the last few years a huge volume of small builders collapse off the back of COVID and all of the complications that occurred around higher construction costs, and many builders that had fixed contracts in place with prices that were fixed in, they could no longer complete those projects, and many went under. So it's a situation where we've got fewer builders in the market. Of those that are still in the market, many of their workers may have moved to government projects because the government is spending a lot on this infrastructure build, and it's creating a further exacerbated shortage in that labour market for residential projects. And this is specific to Southeast Queensland because of the circumstances that we have in the lead up to the Olympic Games. So from a construction perspective, we know based on building approvals that there's very little, or the volume of approvals has been declining, not increasing, at a time where we do need more dwellings. And we also know that the completions are also nowhere near the level that they need to be to accommodate the volume of people that are relocating to Brisbane and the southeast corner.
I think it's also a little bit specific, and maybe because I'm biased on this one a little bit, being my background, but I think it's specific to certain parts of construction. Okay, when we talk about construction for new homes, we're talking about trained carpenters and plumbers and people that have put a nail bag on and actually physically go and build these properties. Whereas, as Melinda touched on, the government side of things and the union-based projects are very different. Okay, so people can probably get paid a little bit more. Whether they do a little bit less, I'm not sure. I don't want to get caught up in that side of things. But there's different sides of construction. Okay, and we need those small builders and those everyday builders that go out and the chippies and those sort of guys to build the houses. Otherwise, we will have that shortage of the houses getting built because the big infrastructure jobs are going to happen, are happening, and will continue to happen over the next coming years. So we definitely need those tradies, if you want to call them, to come and build all those houses as well.
Huge opportunity for those that might not already be in Southeast Queensland that hold a trade. Plenty of jobs up here for those that are willing to sweat it out in our summer and be on residential construction sites, helping to bring forward some of that supply that we really desperately need in Queensland and Brisbane as a whole.
Good tip for any young people looking to get into a job. If you haven't got the university side of things, have a look at a trade. I don't think it's a bad option as either. There's a future there, and you can continue to grow from not just that apprenticeship to a carpenter, but you can become a builder and you can get a better job that way as you move up through the ranks and get the skill set as well.
Absolutely. So I think if we want to have a look at some important sectors that I think we need to watch throughout 2025, it's absolutely no doubt that the affordable housing segment will remain a focal point for Brisbane. I believe that first home buyers and investors will continue to dominate as they have done throughout the latter months of 2024. And what that means is these buyers typically target the more affordable segment of the market. So I believe that smaller dwellings such as townhouses and units will continue to remain in strong demand, driven by those affordability constraints. I believe that we will see more demand remain in these markets as people want to live closer to entertainment hubs, lifestyle precincts, and closer to where they work, on accessible corridors where public transport enables them to move freely between these precincts. I also expect that units and townhouses will continue to, especially up to a price point of $700,000, will continue to be a hotly contested product because these are the markets where we see a lot of those first home buyers that can benefit from the stamp duty thresholds or reduction to stamp duty thresholds. These are the markets that they're very active in. So if I was to predict which market may outperform in the next 12 months in Brisbane, I'd definitely be focusing on these segments simply because I still feel that with median values under the threshold that stamp home buyers have for stamp duty concessions, there's more movement in that segment of the market that will yet take place. Additionally, the cost to replace these products is significant. So from an investment perspective, when you look at the cost to build a two-bedroom unit, for example, and the cost to buy and establish, there's a huge price discrepancy between the two. And for developers to build new stock, we need to see that gap close.
I can't agree more. I think the unit side of things, unit townhouses, in good locations.
That's a very good point.
In prime locations.
Very good point.
Will be a massive, I think that will continue to perform. Affordability, lifestyle. I think people nowadays, whether it's because of the number of people that have moved here from interstate, change of lifestyle, people like living in units, low maintenance. People love the low maintenance because people want the lifestyle. As you get closer to the city, you get that lifestyle. You've got the access to the bikeways, to the South Banks, to all those areas where you can access things. So prime locations, affordability, they rent out very well. And I think the rental market will stay very, very tight. I can't see that really changing a lot because, again, we're not supplying enough dwellings. So that makes sense that will probably stay low. So I think watch the townhouse and the unit side of things, the established in Brisbane. I think that will, in good locations, that will perform very, very well in the next 12 months.
And just for further clarity, when we talk about smaller dwellings, we're not talking about inner city, high density units at all. We're talking about blue chip locations where you might have a decent block of land with 4 to 6 units in a small neighborhood where there's no potential for high density dwellings nearby. So just for a little bit of clarity, they're the product type that we feel still got some legs in the next 12 months. I will also say affordable markets, regardless of location, will still grow in value. Now, when I say affordable, it's not necessarily just a price point. Affordable to me means that the people that live in that location can continue to pay more for property values in that location. So, for example, if I had $1 million to spend in Brisbane right now, knowing that the median value for houses sits just under that threshold, I would be looking at locations that have people on high income, strong owner occupiers, in terms of the demographic who live there, knowing that the people that live there, that local demographic, can continue to support higher mortgage repayments and higher rent repayments in that market. I think that's what affordability means to me. It's not necessarily a price point. There's plenty of affordable markets that have median values above 1.5 or $1.8 million in Brisbane. And there's plenty of unaffordable markets that have price points, below $700,000 or $800,000. So it's understanding the demographic of what you're buying into, because affordability should be measured based on the local demographic, not on an interstate buyer demographic that may be buying into that area. And there's a very big difference in who that buyer is. Because a local buyer versus an interstate investor, it's going to expose you to risk if you're buying in an area dominated by those interstate investors.
Depending on the migration, I'd be interested to see. I'm not saying this is something that I'm recommending, but your higher rise unit complexes for affordability side of it, people looking for a bit of cash flow, wouldn't be surprised if that does a little bit over the next 12 months too. As we start to grow, Brisbane starts to change, becomes more condensed, and people want to live closer and closer to the city. I wouldn't be surprised if that market does move a little bit. But again, it's probably more of a cash flow play for people as well.
I think when you consider, how does Australia grow its population? The majority of our population growth here in Australia comes from international migration, not from natural births. And then we need to consider long term. And when we look at federal government studies, they can show and predict where that population is likely to come from. And a lot of that population growth in the next 20 to 30 years is likely to come from Asian and Indian based population groups or demographic groups. And so we then need to consider, well, how do those population groups like to live, and where do those population groups like to live? And if we can apply those longer term demand drivers alongside the local supply of any particular product type, it might give you an indication of where that long-term growth potential might be, because demand and supply usually are the indicators that ultimately determine the direction of prices in a given market. So there's a tip: just look a little bit long-term, understand how other population groups might like to live. Of course, growing up in Brisbane, in the outer suburbs with a big backyard and a Hills hoist. I think that's demonstrating my age when we talk about a Hills hoist. That's a clothesline that we used to swing off as kids.
And get into trouble.
Because you make it lopsided. But at the end of the day, the way we used to live versus the way we may choose to live in the future may change.
Yep.
And I think that's important for us to understand as property professionals, because this is also going to be an indication of where that demand might shift to.
Another influence, I think, which can happen this year will be the government. Any policies, any changes, taxation side of things, investment. But also one thing I think which could change things is AI and technology.
Yeah, it's such an interesting space. And the speed at which AI has really moved into our lives has made a big impact. I know that there's a lot of people in property that are more comfortable these days relying on AI and data alone to make property acquisition decisions. Personally, I feel that that's a big risk because I don't think that AI and or data can replace the intellect that we have as human beings in terms of the emotional side of buying property. And remember, whether you're a home buyer or an investor, the majority of the market are home buyers, and home buyers don't act according to what the calculator determines. Home buyers can be emotional buyers, and that can influence where they're willing to spend their money. So I think that there's a place for AI and there's a place for data in selecting or helping us to locate certain areas that we may choose to buy or we may choose to invest. But I believe that there'll always be that human element that enables us to overlay those objective parameters. That's something that's measurable through data. We overlay that with those more emotional drivers or non-objective drivers, and I think that that's where you're going to get the best opportunity to predict what's likely to happen.
From a buyer's agency side of things, I mean, look, AI, I think it's helpful for some parts of things, but that I strongly believe there's something you can't beat, and that's the physical inspection and the local knowledge.
That's right.
As cities change and as places change, you've got to keep up to date with that. Now, if people aren't on the ground in those areas, it's like another capital city. Would I buy there? No, I don't know them. So why would I pretend to know them and know the areas, know the streets and know the neighborhoods? Locals, I think, are extremely important as cities change and as things develop and new things get built in different transport corridors, things like that. Those sort of things are critical. And I think you need to keep on top of that and make sure you got people locally that know what they're talking about. When we talk about predictions, and I know this is something that we wanted to jump into and everyone wants us to do some predictions. Well, we've got some. They're not actually ours, but we've said what we think we'll watch. But Brisbane's forecast, and this has come from the boom and bust report.
Yes, SQM Research always put out a boom and bust report each year about this time, and they make predictions based on each capital city market, how it is likely to perform within the next 12 months. And looking ahead, based on the chronic undersupply of housing, coupled with strong interstate migration and plenty of employment opportunities, we do expect that the predictions that are across the board, and we've got a few different predictions to share with you. We do expect that that Brisbane will achieve something in the vicinity of what others have also predicted. So if we look at the boom and bust report as an example, this actually produces a number of scenarios based on what could or couldn't happen. And, you know, I think it is important for listeners to understand that when people make predictions, they're basing it on the fact that there's going to be no huge geopolitical event or international unrest. I mean, we're assuming that nothing really changes in the broader global economy or local economy. With interest rates, there's predictions based on the fact that we expect interest rates perhaps to come off 0.25%, perhaps 50 basis points within the 12 months of 2025. If interest rates were to decrease sooner or faster or more rapidly, obviously we expect a different outcome. But if interest rates were to remain stable and potentially even increase, that outcome might be different. And there could be many things between now and next year, or rather now and, you know, mid-year, that may actually impact the trajectory that we expect. However, based on the boom and bust report, Christopher's Housing Boom and Bust Report for 2025, put out by SQM Research, Brisbane is predicted to grow by between 9 and 14% on the basis that interest rates are cut by 25 to 50 basis points throughout 2025. That's pretty significant growth, Scott.
I think when you look at this report, they do different scenarios, okay? So that's just one of the scenarios, but every single scenario that they do is showing an increase.
That's right. Yeah. So regardless of whether rate cuts are expected, whether there's no rate cuts, whether multiple rate cuts are implemented, Brisbane is expected to grow according to the boom and bust report. And what's also interesting is that while Brisbane's forecast is for between 9 and 14% growth, there's many markets where the forecast for growth is expected or predicted to be negative. Okay, now let's just highlight some of those markets. Melbourne's market is, the this report is predicting negative growth in the next 12 months. Sydney, negative growth. Hobart, negative growth, and Canberra, negative growth. Whereas Adelaide, Brisbane, and Perth are predicted to experience positive growth. Now, that is in line with the summary that we provided at the beginning of this podcast episode, and a lot of that is based on local drivers of supply and demand.
That's our prediction.
That's the SQM prediction.
That SQM, I'm probably jumping on board them a little bit. Do you have any other ones that we've got there?
Look, I've actually done some research to see what have some of the big banks predicted. Now, I'm always a little bit cautious talking about bank predictions because a lot of the time they get it wrong.
Is that when they said in COVID we're going to drop 20 to 30%, or was it more?
There's a lot on record. A lot of people on record suggested that we were going to drop up to 40% in that COVID period. And of course, looking back, history confirms that absolutely did not happen. But let's have a look at the NAB residential property survey. So the National Australia Bank, their view in terms of dwelling value forecasts for Brisbane is that in 2025, the forecast is for 5% growth rates across Brisbane. They have also forecast positive growth across all capital city markets, which is different to the boom and bust report that's been put out by SQM Research. So I do wonder how their forecasts will go in comparison to the boom and bust report, but time will tell. I've also got some dwelling price forecasts that have been put out by Westpac. Now, I've got a couple of different updates here because in the middle of the year, Westpac were forecasting growth in Brisbane to be 10% for 2024. We ended up doing a little bit more than that, which is interesting. But for 2025, Westpac were predicting 3% growth in Brisbane as their forecast. Fast forward to November, Westpac have done an update. They are still predicting Brisbane to increase 3% throughout 2025, and they've gone as far as predicting 2026 price growth to be a further 6%. So again, super interesting when banks put out these numbers. I would love to reflect back at the end of 2025 to see how accurate some of these indicators are. Of course, if you are wanting to dive further into any of these predictions that are put out by the big bank, you can have a look at the NAB residential property survey, or alternatively, the reports that are put out by Westpac Economics Housing Pulse updates. They're going to provide you with this information, and they're going to highlight for each capital city market what their predictions are. Be aware they do update regularly, so you really need to capture the information and take it as you please because they're constantly being updated. If you're interested in reading the SQM Research Christopher's Housing Boom and Bust report, head on over to the SQM Research page. You'll be able to buy that report there and get a really good understanding of the in-depth breakdown that is provided in that particular report as well.
Well, that's the start of the year. Off with the boom, I think. Boom and bust, they say. Well, off with the boom for the start of the year for 2025. I look personally. I know when we look at predictions, as we touched on, I think, as we said earlier, watch the unit and townhouse space in Brisbane. Watch Brisbane. I think the banks are a little bit conservative. I'm probably a little bit more on the boom and bust report because of the supply and demand side of things and construction costs. So and obviously long-term infrastructure and all those types of things, everything combined there, population, employment, all those types of things. I think 2025, we're in for a pretty positive year in Brisbane. So
I'm going to be a little bit more conservative than you. I'm going to say that 2025 will still be very strong performance in Brisbane, but it may not be quite as strong as 2024. That's my prediction, still well and truly ahead of other capital city markets, including the likes of Sydney and Melbourne. But I think that there's going to be a little bit of a slower start until we actually see a stimulus that might come from those interest rate cuts partway through the year. So let's see how accurate that prediction is. Of course, when we are out and about inspecting properties for our clients in the early weeks weeks of this year, we're certainly going to get a really good indication and snapshot view of what that demand is like. And if you want to keep up with what we are seeing on the ground month on month, tune into our podcast, especially our market update episodes. That's going to give you a really good understanding of what we are seeing, and everything we see on the ground is ahead of the data that is reported. So it's going to give you the best opportunity to position yourself, whether you're buying a home or an investment in Brisbane. You will understand the market conditions in which you're purchasing.
Well, predictions. My only other prediction is I actually think the Lions might go back to back and win another AFL flag this year. So
putting it out there.
There's my early tip. I'm sure some people will love that. Some people will probably hate it. But look, that's the start of the year for the podcast. As usual, I let Melinda wrap things up. It's been great talking. Hope everyone continues to have the rest of their holidays. If you've got more time off, enjoy it while you can. Enjoy the summer and back to work, obviously, with a lot of energy. So enjoy the rest of your holidays. If you've got holidays, take care on the roads and traveling as well. And we look forward to bringing you lots and lots of information, podcasts, guests, and everything for the rest of the year. So take care and bye for now.
Thanks again for joining us on the Brisbane Property Podcast. Once again, we wish you a very happy new year for 2025. We hope it is very prosperous for you in whatever you are choosing to do. If you need help purchasing property here in Brisbane, whether that's a home or an investment property, please reach out to our team at Streamline Property Buyers. We are here to assist and guide you through the purchasing process. If you've enjoyed this content, please share with friends and family. We would love for you to leave us a review on your favorite podcast player as well. But until next week, we hope you continue to enjoy your holidays, and we look forward to speaking with you again soon. Bye for now.